Hi, this is Supriyo. In this video, we are going to cover each and everything about the non-performing assets or the NPAs. Now remember, when you think about this word about NPA, just note that it stands for non-performing asset, right? So what is an asset? We have already talked about the bank's liabilities and the assets. So I hope that you remember those things. So the loans that the bank gives out, those are the assets of the bank. And when these assets, they become non-performing, then they are called NPAs. So how can they actually become non-performing? Let's find out. So the first thing that you need to remember is the definition of the NPA. So any loan or advance where the principal or the interest, any one of them or both of them, remains overdue for greater than 90 days, it is called a term loan. Now remember that there are various classifications and various loans, they can become NPA using a slightly different methodology. So in case you have term loans, then if you have the principal or the interest overdue for greater than 90 days, then you can call them as an NPA. Now the definition for the bills purchased or the discounted bills, for those also we have the same definition. So if the principal or interest in these accounts is overdue for greater than 90 days, we call them an NPA. Now coming to the agricultural loans, so those depend on the duration of the crop. So if you have short duration crops, now short duration crops means these are the crops which you can actually sow multiple times in a certain year. So you can have 2 or 3 seasons in one particular year itself. For those, if the principal or interest is overdue for 2 crop seasons, then they are called NPA. And in case of a long duration crop which take a long time and in a year you can only place them once, for those long duration crops, if your principal or interest is overdue for 1 crop season, then you can call them as an NPA. Now this is extremely important, vitally important. So remember all of these differences and the different ways in which you can call any account an NPA. Now that's all about the definition, and the next thing we have to look at is the net NPA and the gross NPA. So the net NPA, it is defined as the gross NPA minus the provisions that you have actually made. Now what are NPA provisions? Just think about the NPAs. They are assets to the bank, right? So when you are giving some kind of loan to somebody, then you might have a situation where those loans can go bad. So you need to have some provision, or you need to keep some money aside. Just think of it like that you are keeping some money aside and you are saving up so that in case any of those people are defaulting, then you do not have any kind of issues. And even if the account is stressed, then also we have to have provisions. If the account is not an NPA yet, it is a normal account, then also we have some provisions that we have to keep according to the Reserve Bank of India. So that's what the provisions are actually. So remember this equation. And speaking of the different kinds of NNPA and the gross NPA, let's take a look at the figure for India. So this is from the Financial Stability Report of the RBI. So this is the Scheduled Commercial Banks gross NPA, the GNPA. As you can see, in March 2020, it was around 8.5% cumulative of all the scheduled commercial banks. But remember that the PSBs, the public sector banks, they have a higher percentage. They have 11.3%, and the private banks, they have 4.2%, and the foreign banks, they have 2.3%. Similarly, when we are talking about the net NPA, then all the scheduled commercial banks together, it is around 3%, and for the public sector banks, it is 4.1%, the private banks 1.4%, and the foreign banks only 0.5%. Note something over here that for the March 2020, we have the gross NPA as 8.5%, right? So in March of 2019, it was around 9.3%. So it has actually reduced right now, but it is not something that is going to be continuing, because the RBI says that by March 2021, our gross NPA figure, it can actually touch 12.5%. Can you imagine that? 12.5% gross NPAs by March 2021. And if the economic situation, the macroeconomic situation does not improve, the RBI says that we can have as high as 14.7%. So these are all the future projections that the RBI has made in their financial stability report. So you can just remember this figure. It might be sometimes asked to you, and this is something that we have to take care of. So now let's move to the next part of this. So basically this was the RBI's report, and now coming to the NPA categories and the PCR. So what is the PCR? It is the provisioning coverage ratio. So this means the ratio, the percentage of the provisions that you need to make as per the tenure of your loan or as per the kind of loan that you have given. So the PCR norms and the different percentages, the provisions that you have to make. So that's what we are going to take a look at, and we are going to take a look at the various categorizations of an NPA. So the first thing that we have to find out is the provisioning in the NPA accounts according to the asset classification. Now what is asset classification? You might have heard about something called an IRAC. So IRAC status you might have heard about. This is the income recognition and asset classification status. So what does this mean? So the assets, they are actually classified as per the IRAC status. So what is the IRAC status? We have different kinds of status for different periods of the NPA. Now before we go into this, just remember we have something called the SMA or the special mention account. So this means that if you are actually not able to pay back your loan on the exact due date. So for example, think that your due date of your loan was on October 1, right? October 1, 2020. So if you are not able to pay, if October 2 comes and you have still not paid, then the bank will classify your account as SMA or special mention account. Now SMA, there are three types of SMA. There is the SMA 0. So SMA 0 means that your account has been overdue for 0 days up to 30 days. So 0 to 30 days, it is SMA 0. Then you have something called the SMA 1. So this means your account, it has been overdue for 31 days up to 60 days. So that is the SMA 1. And then you have the SMA 2. So that is an account which is overdue for 61 to 90 days. So till 90 days you are going to have as special mention account. So remember that. And then when the 90-day threshold actually crosses over, then it becomes an NPA, right? So now you come to the different IRAC status. So what happens when your account, it is actually overdue for greater than 90 days and up to 1 year, then it is called a substandard account. So just remember this, that your October 1, you had the actual date, right? So just considering that example, 90 days are going to be completed on January 1, right? So January 1st, 90 days are completed. Then you are still not paying back. So January 2 comes. So when January 2 comes, your account becomes an NPA, a non-performing asset. And at this point of time, it becomes a substandard account. So now that it has become substandard, so this is January 2, 2021. If your account remains as a substandard account till the January 2 of 2022, so 1 year, then it becomes substandard. It stays as a substandard account for that 1 year. Then if you are still not paying back, then it goes to the doubtful categories. So it becomes the D1 or the doubtful one. So this is for the second year. If your account is NPA for the second year as well, then you get to the D1 or the doubtful 1 asset, and then you go to the doubtful 2 if it is for the third and the fourth year, and then the fifth year onwards it is the doubtful 3. So these are the classifications of the account as per the time frame in which it spends as a non-performing asset. So that's our asset classification. And there is another one, remember, which is the loss assets. Now loss assets are those assets which the bank has recognized that we now need to actually write these loans off, and we can still go ahead and pursue the recoveries, but the loans will be written off, and so those assets are actually classified as loss assets. Now the loss assets, it doesn't have to be that it's greater than 5 years or 6 years. Sometimes if we find out that the asset is just unrecoverable, then we can even within 1 or 2 years also declare it as a loss asset, or even lesser than that. So it actually depends, but it is just another one of the asset classification. Now remember another thing over here, that earlier what used to happen, all these asset classifications that you are seeing, they were earlier manually done. So all this substandard, D1, D2, D3, all these things in the bank, we have something called an RG status, or what is called a risk grade status and RG status. Now these things are a little bit more complicated and more technical, you don't need to know, but just remember another thing, that these manual interventions, now the RBI has said that you cannot do it manually. Now this will be a huge challenge for the banks, because I remember we used to do it manually and it used to actually be helpful for us to manage the NPAs, but now the RBI has become extremely strict and they have said that all these things that you are seeing, the D1, the substandard, the different SMA accounts, they will now be automatically marked by the system. And just remember that all these automatic things, they must be in place from June 30, 2021. So that is the date, June 30, 2021, by which all these systems have to be automated. Now the banks really have to comply, otherwise they will have some penal actions by the RBI. So coming back to this image that you can see, so basically this is the provisioning in the NPA accounts according to the asset classification. So just remember this normal provisioning. You don't really need to remember the accelerated provisioning because these are a little bit more complicated. So just remember this and the normal provisioning for the secured assets and for the unsecured assets. So for the secured assets, if you have substandard loans, that up to 6 months 15% provisioning has to be done. Then above 6 months to 1 year, you also have to have 15% over here. And if it is unsecured, then 25% for other loans and 20% for the infrastructure loans. So both of these things are same. For the doubtful 1 category, you have to have normal provisioning of 25% for the secured assets, and for the unsecured it is 100%, and for the doubtful 2 it is 40% and 100% over here, and in so on and so forth you have 100% for the rest of those things. Now these percentages, what are they a percentage of? They are a percentage of the outstanding amount of the loan. So you have to have provisions of this much percentage out of the total value that is outstanding in those loans. So just make a note of it. And now coming to the next thing, you also have to have these provisions made for the standard assets. So if you have any direct advances to agriculture or the SME sector, you have to have 0.25%. For the commercial real estate sector, it is 1%. For the commercial real estate housing sector, it is 0.75%, and for all other loans and advances it is 0.4%. and remember, this is for the small and the micro enterprises, the 0.25%. For the medium enterprises it is actually 0.4%, so same as the other loans. And some important NPA related terms, so there is something called the quick mortality. So if any account becomes an NPA within 2 years of the disbursal of the loan, then it is called a quick mortality, and special things have to be done by the bank for these loans. Then you have the willful default. So these are the people like the Nirav Modi and Vijay Mallya, the people who do not pay back the money and they just run away. So people who have the capacity to actually pay back but they do not pay, so those are called willful defaulters. And then you have something called the diversion of funds and the siphoning of funds. So diversion of funds means that you are misutilizing your funds. So for example, you take a loan for buying a house, for example say, and then you are not using the loan to do that exact thing, but you are maybe putting it into your business or something like that. So sometimes people will take term loans and they will be using it as cash credit, and they will be using some day-to-day activities using that. So those are called the diversion of funds, and it is a misutilization basically. And the siphoning of funds, it is basically taking the money from the bank and then channeling it into an unrelated activity. So you are taking the money legally from the bank and maybe you are channeling it into gambling purposes, or maybe you are just creating some shell companies. Those things, they are called siphoning of funds. And then you have something called the overdue or the out of order. So any term loans or bills discounted, if you are not paying back, it is called overdue, and out of order is the overdraft facility or the cash credit facility. So these are just technical things that you need to remember. So now let's move to the next part. So the resolution of the NPAs. How will you resolve the NPAs once they have actually happened? So you can do something called a loan waiver. Now you have read in the newspapers about loan waivers. So farm loans, they are often waived for the election purposes. Now what happens is, in a loan waiver, the government gives the money to the bank, so they will be paying the banks in terms of long-term bonds, and the banks, they do not actually want these kinds of payments because it takes a long time to get the money back. But there is no real hope because right now for the elections a lot of waivers are done. And then there is something called the loan write-off. So when the bank sees that there is a very less chance of recovery, they write off those loans and they will make 100% 100% provision. So 100% provisions will be made, and there is something called an AUCA account, which is an assets under collection account. Loans will actually be moved to that account, and the recovery process, they will still be trying to do it, but sometimes it works and sometimes it doesn't work. So that is the write-off when the banks themselves will be writing off the loans. And there is the RBI's 3R method. So RBI has 3 R's. So the first R, it stands for rectification, the second R stands for restructuring, and the third R for the recovery. Just remember the full form of that. And right now let's talk about the SARFAESI Act. So what is this act all about? So what does SARFAESI stand for? It is the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act. So this act, there are 3 things. So basically securitization. So what happens over here? The loan, they are actually converted into bonds and sold off so that the bank can actually get the money back. So that is the securitization. Then you have the reconstruction. So in this way, what they are doing, they are actually changing some terms of the loan so that the borrower is able to pay. So that is the reconstruction. And then we have enforcing the security interest. So this means that you are actually selling off the various securities that you have. So you might be selling off the land, the property, or any belongings which were actually given to the bank. So that is how they are going to get the money back. And the secured creditors, so basically this SARFAESI Act, this is only for your secured loans. So loans which are actually backed by a security. So the secured creditor, they can take possession of a secured asset and sell it without intervention of any court. This is very important. So in a SARFAESI Act, you do not have any court intervention. So earlier there were a lot of problems because of the court's involvement, and because of the SARFAESI Act, now there is no such kind of intervention, and the bank can go ahead and do the sale of the assets without any kind of problems. And just remember that the SARFAESI Act, it is not applicable for the agricultural loans. So any agricultural land, if it is involved, then it is not possible to sell that using this act. So it is only for the non-agricultural loans, and the outstanding must be greater than 1 lakh so that you can actually apply the SARFAESI Act. And also the NPAs where the outstanding is lesser than 20% of the principal or interest are also not eligible under this act. So for example, if you have any large amount of loan as well, but more than 80% has already been paid, then you cannot go ahead and you can use this. So the outstanding has to be less than 20% so that you can make use of this act. And if the sale proceeds are not enough, the bank can file a suit with the Debt Recovery Tribunal. So we are going to take a look at that. And the unhappy borrower can also appeal to the Debt Recovery Tribunal and then the Debt Recovery Appellate Tribunal, but not with any civil court. So no courts are involved, and they must deposit 50% dues, the borrower I mean, before they can appeal any decision. And the Supreme Court, they have recently said that cooperative banks now come under the SARFAESI Act. Now this is very important because this was a very recent decision by the Supreme Court, and this was a very contentious issue. So just remember that cooperative banks, they now come under SARFAESI. And moving on to the next thing, so there is something called the Lok Adalat. So what is the Lok Adalat? Now it is a special kind of a court that can settle all these NPAs. So the borrower and the bank, they can just go into that court so that the NPA is actually resolved and the settlement is arrived at. And this Lok Adalat, it is actually governed by the Legal Services Authority Act 1987, and the maximum limit, remember, it is 20 lakh. And the next thing is the Debt Recovery Tribunal or the Debt Recovery Appellate Tribunal, the DRT and the DRAT. So these are tribunals which are, you can say, some kind of special courts which help the banks or the financial institutions to resolve the NPAs, and these are governed by the RDDBFI Act. So this is very important, Recovery of Debts Due to Banks and Financial Institutions Act 2016, and this was actually framed by the Tiwari Committee, remember that. And the pecuniary limit is actually a minimum of 20 lakhs. So this means that for going to the DRT, you need to have at least a minimum of 20 lakh outstanding so that you can go ahead and you can approach the DRT. And below 20 lakh, you can of course settle in the Lok Adalat that we just now saw. And remember that the Debt Recovery Tribunal, it is headed by a presiding officer. So the qualification of a presiding officer, the person must have been a district court judge, and the tenure of appointment is 5 years or till the age limit of 65 years is attained. And the appeals against the Debt Recovery Tribunal can be made in the Debt Recovery Appellate Tribunal within 30 days. So if you are not happy with what the DRT has ruled, then you can go ahead and approach the DRAT and they are going to hear your case. and the DRAT chairperson. So a chairperson is heading DRAT, and that person, the qualification, minimum qualification has to be High Court judge, and the tenure has to be 3 years or the age limit of 70 years. So just remember these specifications and note them down so that any questions can come from them and you can tackle them. And now going to the next part, so we have the IBC 2016 or the Insolvency and the Bankruptcy Code of 2016. Now let's take a look at this. So basically for the IBC 2016, it is actually a time bound process for insolvency resolution, and now this is actually very new. So remember that before the IBC, the RBI used to have many different kinds of schemes to actually resolve the NPAs. So we used to have the CDR or the corporate debt reconstruction, then we used to have the SDR, which was the strategic debt reconstruction, then we had the S4A or the scheme for sustainable structuring for stressed assets, and we used to have the 525 scheme and also the JLF or the Joint Lenders Forum. So all these different kinds of schemes were cancelled by the RBI after the IBC came, and the IBC is the only thing that is right now used. So now we can do the insolvency resolution of the companies and also the individuals, and the minimum limit is 1 lakh, remember that, and the time limit, this is also very important, it is now 330 days. Earlier this time limit was actually 270 days, but later on 60 days were added in 2019 amendment. So now 330 days maximum you can take to actually resolve cases under the insolvency and bankruptcy code. And remember something, there is something called the insolvency professional or the IP. Now the insolvency professional, they can actually sell the assets of the company and they can take over the company as well and try to resolve all of the various kinds of things. So technical details are not important, just remember that they help in the resolution process. And the two adjudicating authorities, so there is something called the National Company Law Tribunal or the NCLT for the corporates and the limited liability partnership firms. So corporates or LLPs, they can go ahead and get the resolution under the NCLT, and for the individuals or the partnership firms, you can go ahead with the debt recovery tribunal, which we already discussed. Now of course you can appeal against the DRT and the NCLT. So the NCLT appeals, they go to the National Company Law Appellate Tribunal, and the DRT complaints, they go to the Debt Recovery Appellate Tribunal. So these two tribunals have been set up for that purpose. And the Insolvency and Bankruptcy Board of India, IBPI, they are the regulatory body for the insolvency process. So very important, remember that they are the insolvency regulator, and they have 10 members from the Ministry of Finance, Ministry of Law and Justice, Ministry of Corporate Affairs and the RBI. And the chairman of the IBPI is MS Sahu. And Justice Irati Committee had actually recommended the NCLT. So that is also something that you need to remember. So that's all about the Insolvency and Bankruptcy Code. And then we have something called the PCA or the Prompt Corrective Action. So while covering the Basel norms, if you want coverage of the PCA, let me know, I might cover it in the Basel norms. So basically just remember that PCA, this is basically used to keep the banks in track, so the RBI can just ensure that the banks are not going out of line and they are following all the different norms that the RBI has prescribed. So that is what the PCA is for. And also you can do something, you can sell your loans to the ARC or the Asset Reconstruction Company. So what is this? So the ARCs, they are buying the bad loans from the banks or the financial institutions, and the minimum net owned funds of an ARC, it is 100 crore. Now some examples of an ARC. So the most popular one is the Asset Reconstruction Company India Limited, ARCIL. Then you have the Edelweiss ARC, Reliance ARC Limited, etc. And the NPAs, they need to be acquired at a fair price by the ARCs and at arm's length. They can actually change or supersede the management, sell or lease the business, restructure debt, enter into settlements, etc. And also remember, they can enforce the security interest if 75% by value of all secured creditors agree to exercise this right. So if all of these people are agreeing, then they can go ahead and sell the different assets and thus get the money to resolve all of these things. And just remember that the ARCs, although there was a lot of fanfare when they started, because internationally ARCs are very popular, in India their performance has not been great. So there has been a call for a public sector bad bank, which is the PARA, and this is called the Public Asset Rehabilitation Agency. So this PARA, some people are saying that government should make a body like this, so that this public sector body will be buying up all the bad loans and we can resolve it very well. So that is all about the ARCs. And just remember, what is this haircut that we have said? So haircut means that whenever say for example you had a loan of 10 lakhs but you are only able to just have 6 lakh recovery, then the 4 lakh that you have, that is the haircut. So any kind of haircuts the bank has to take when you are selling a loan to the asset reconstruction company, because just imagine that if you have a large amount of loan, then the ARC also has to make money, right? So the ARC will buy the loan from you at 6 lakh and then maybe they are going to get maybe 7 lakh or 8 lakh finally resolution. So that is how the ARC makes money, and so this is all about the bank's haircut. And finally we go to the NPA restructuring. So what is the NPA restructuring? This is the various kinds of schemes that the bank just brings out. So you might have heard about SBI's Rin Samadhan scheme. So Rin Samadhan scheme, in that what happens, the borrowers which have been defaulting, they are given some options. It is called an one-time settlement scheme or the OTS scheme. So there they can say that we are going to reduce your payment, we are maybe going to waive off the interest, we are going to reduce the tenure of the loan or some things like this, and they will be given some incentives that you give the cash to us now and we are going to forgive your loan. So that is the OTS scheme, and basically what is done is the change of tenure, so the change of the repayment period, so that people do not have to repay the loan immediately but they can have some more time to repay, or they are waiving the interest as well. Sometimes principal is waived, but that is very rare. Now what is the CRILC? So this is the Central Repository of Information on Large Credits. It is actually maintained by RBI for borrowers which have exposures of 5 crore or more. So any borrower who has exposure of 5 crore or more, the details of that you can find in the CRILC. So each and every bank, they have to send a quarterly report. So quarterly they will be sending a report to the RBI, and that is how the CRILC will be maintained by the RBI. So any loans 5 crore or more, you have to send to this CRILC. And what are the stressed assets? Basically, they are a summation of all the NPAs that you have in the bank, then all the restructured accounts. So if you have restructured any kind of loans, then you have to just include it over here, and then the summation of the write-off amounts. So all the loans which have been written off, those are also summed. So all these three things summed together are called the stressed assets. Now the next thing, what is the AQR? So AQR is the asset quality review. So sometimes the RBI will be doing asset quality review. So in that, what they are looking for, they are actually checking whether all the loans have all the documents and all the important things that are required. So they are basically cleaning up all the various kinds of compliances. So that is what the asset quality review is. Just remember the full form. And the JLF, so the JLF is the Joint Lenders Forum. So as we talked about, the RBI used to have different kinds of schemes like the SDR, the CDR, the S4A, etc. So all these schemes were actually handled under the JLF or the Joint Lenders Forum. So basically all the banks which had given loan to one particular company, they could come together and just have some kind of a discussion regarding how they will resolve all those NPAs. So that used to happen, but now the IBC has replaced it, so we don't need it now. And in this regard, also remember there is something called the Fugitive Economic Offenders Bill, the FEO bill. So some people who have actually exited the country, who are not paying back their loans, who are willful defaulters, those people are classified as fugitive economic offenders. But remember that 100 crore is the minimum amount for which it is actually applicable. So the amount which is in question has to be 100 crore or greater than that. So coming to the final thing, what is the slippage ratio? The slippage ratio is basically the fresh accretion of NPAs in a particular time frame. So basically it is the ratio of the fresh NPAs that you had in this period divided by the standard assets at the beginning of this period. So whatever standard assets you had, out of them which have become fresh NPAs, that ratio you are taking out, and that is called the slippage ratio. It helps you understand that how the bank is performing and how many new NPAs are actually created. So that is all about our NPA session. We have covered a lot of things. Any questions, let me know in the comments down below. I hope that you learned something from this video and that it was beneficial to you. If you enjoyed it, please leave a like and share it with your friends. And if you want more of this kind of content, please click on the subscribe button and do not forget to click the bell icon so that you, my friend, do not miss any future update. I'll see you in the next video. Bye bye.